In this lesson, we are going to look at how to build a momentum trading model using Python and an open source library called Backtester from Aquan. In this lesson, we are going to build a trading model. To do that, we will first look at what the critical elements of a trading model are, then find ways to develop a trading strategy using machine learning, and finally implement a momentum trading model using an open source library known as Aquan. We will use Aquan to generate trading signals and then use the library to build a trading model and see how it performs. We will then tweak it and see if we can make some money. So, are you ready to learn some new tricks? Let's start. All of us want to build and test a trading system. That's why we are here for this course. And we also want to use ML in this process. How can we build and test a trading model? In order to simulate algorithmic trading on our computers or on the cloud, there are several critical components. First, we need to simulate an exchange or connect to an exchange to trade. What is an exchange? An exchange is where buyers and sellers come together to transact assets. Could be stocks, bonds, currencies, futures, or even bitcoins. In the chart here, we see that you're sitting in front of a computer or a phone, want to buy or sell a certain asset. What you need is to connect to a broker, whether physical or electronic. Then the broker connects to an exchange where many more participants, just like you, have come together to buy and sell the same asset that you're looking to transact. The only question is at what prices and what sizes. This is where electronic trading comes in. We put in prices that we are willing to buy and sell, and the exchange or the market simply matches our buy and sell orders against someone else's buy and sell orders at a price we have marked. To build an algorithmic trading system and test it, first you need to come up with a trading strategy. That is, decide which markets you want to trade, develop the logic with which you want to trade them, and define the parameters by which the trading logic is triggered. Next, you need prices of those assets. You can think of it as a database that holds historical prices for the assets you want to trade and an engine that helps test your strategy against historical prices. We will call this the backtesting engine. Then you need something like a broker, which you can think of as an execution engine, which holds your assets, transfers your capital, and settles your trades. Then you need an exchange or something that connects your trades or other traders and gets it executed. Finally, you need to come up with a way to narrow your losses and let your profits run. In other words, a risk management system. In this course, we have all the four components. You'll be bringing your trading strategy. We will select a toolbox, which will act as a backtesting as well as execution engine. And finally, you will need to come up with a risk management system or a way to control your losses. Now that we have discussed all, or at least a minimum of components we need for an algorithmic trading system, we need to look for a toolbox that we talked about earlier. Since we don't want to create all the components from scratch, we have chosen an open source library called Aquan Toolbox so that Toolbox will make your job of developing and testing our trading algorithms easier. With Aquan's backtester, all you need to do is to set some parameters for trading. It'll provide you data sources, help you create some features, define your trading strategy, run your strategy, execute your trades, calculate your P&L, and finally, give you charts and graphs to help you see how it does it. Next, let's look at what's going to be the most critical component of this entire trading model, your trading strategy. In this section, you will see how to develop a profitable trading strategy and what considerations you need to keep in mind when using machine learning in that trading strategy. I'm sure you know by now that most traders, some say 90% of all traders, fail to make money because they don't have a consistently profitable trading strategy. That's right, 90%. So if you have found a trading strategy that you think will consistently make money and keep it, congratulations, you're in the select 10% group. What makes a profitable trading strategy? It's more than finding a good idea. A good idea is one that works in one kind of stock or one kind of market. A consistently good idea is one that makes money in, say, one stock over multiple periods or multiple markets. Can also be one that makes money in multiple stocks or assets in one kind of market. Either way, the key word here is consistent. To confidently create a good trading strategy takes a lot of back testing. That's why we need a toolbox that makes our job easier. In addition, since this course is about machine learning, we need to know a bit more about using ML in a trading strategy. Let's look at how to create an ML-based trading strategy. You need two things. One, as you well know, any ML model needs features to learn from and labels to tell it what it is targeting. So first, you need to create features from the prices or fundamental data that you have. Features can be anything that helps determine your target. It could be fundamental data such as price to earning ratios, cash flows, and earnings per share, or technical indicators such as moving averages or ratios of price data, correlations, or more complex signals, or even combining these to create new features. To create features, look at how your chosen securities behave and decide on what the foundation will be. Do you want to trade your securities based on momentum or mean reverting features? Or are you more into pair trading, such as correlated or co-integrated features? Decide on one strategy and stick to it. Third, write an algorithm which will be known as your trading strategy using the previously mentioned features to decide the following: which instruments to buy, sell, or hold, when to buy or sell, and how much, what size to buy or sell. These are some of the most important elements of your algorithm. Take your time to build it and backtest it before you put it into a live trading environment. That's right. The first rule for developing a sound trading strategy is test, test, test. The reason for that rule is that it's better to lose paper profits than real profits. So by consistently working on fine-tuning your trading strategy until you feel that it's consistently profitable, you avoid losing real money later. The best traders I know always started small, worked very hard until they perfected their trading strategy, and once they felt it was ready, they went in with bigger sizes. In the next section, we are going to build a momentum trading model using machine learning, and we will do it step by step.